session for the Portland City Council. It is Tuesday, January 31st, 2017, and today's subject is planning for downtown building space needs. Mr. Reinhardt, I'll turn it over to you and your team, and as per usual, if you could just state your name for the record. You only need to do it once.
Thank you, Mr. Mayor. For the record, my name is Tom Reinhardt. Good morning, Council. I'm proud to be your Chief Administrative Officer and the Director of the Office of Management and Finance. One of our roles in OMF is to advise Council on how to sustain long-term financial health. The Mayor has asked us to work with Council and Bureau leadership to identify ways we can work more closely together as one enterprise. It is in that spirit that we ask for time with you today. The purpose of this work session is to present you options that we have discovered for dramatically improving the cost effectiveness of office space for our entire workforce in the downtown area. Our team developed these options as a result of dozens of conversations with the bureaus involved in the Portland Building Reconstruction Project. These discussions triggered questions about long-term space needs. As the design work in Phase 1 progressed, the integration of these discussions with design possibilities spurred our leaders to consider if it was cost-effective long-term to consolidate employees currently in leased space downtown, as well as accommodate future growth in the reconstructed Portland building. Ken Rust, our Chief Financial Officer, will be walking you through the financial analysis today. And Kristen Wells, the Portland Building Project Manager, is also available if you have questions about how this Phase 1 planning for the project opened up the broader options that we will describe today. To be clear before we begin, we believe we have a viable option to achieve substantial long-term cost savings for the majority of our downtown workforce in the future. That is, existing employees working in leased office space, as well as projected bureau growth, if we invest in updated furniture and tenant improvements to optimize the space. Overall, we have three options for our downtown workforce in the future. One, lease more space in downtown Portland to accommodate growth needs. Two, construct new office space downtown to accommodate the growth. Three, better utilize the newly constructed Portland building to consolidate existing downtown office space that we already have and accommodate the future growth. Today, we ask you consider the options that we'll present to you and provide us with direction on moving forward. We look forward, as always, to your questions and the discussion. Ken is going to now outline the economic analysis for each of the options that I mentioned.
Thanks, Tom. For the record, I'm Ken Rust. I'm the city's Chief Financial Officer and the Director of the Bureau of Revenue and Financial Services. And I'm going to talk from the handout that's in front of you. And Tom's gone through the first couple pages. I'm going to start on page 3 and outline a bit more the different options that Tom mentioned. Option A for dealing with long-term growth for the downtown office space needs of the city has us leasing that space from buildings in the downtown. And our estimate for making furniture investments and tenant improvements for that leased space would be about $10 million. And then the ongoing costs associated with that new space would be about $1.5 million a year. Under that particular scenario, we would continue to have employees in the out leases that we currently have. It's about $1.2 million a year. Option B has us actually constructing a new building or being part of another building that would be constructed where we would be a partner in that, where we would actually own the space. Our estimates of the cost to construct the space needed for the growth-related projections of the city workforce is about $25 million. We'd also incur then ongoing operations and maintenance costs of about $884,000 for that on an ongoing basis. Under that scenario, where we basically maintain the current workforce in the Portland building that exists, build space for the growth-related workforce, we will still have ongoing leases for those who are in out-lease space of about $1.2 million a year. The third option, option C, is one where we would look to optimize the Portland building as we get ready to reconstruct it. And we believe that by investing about $18.8 million into new furnishings and fixtures for all employees in the building, and to build out the tenant improvements associated with more folks coming back into the building, that we could accommodate the growth needs and could then bring in folks that are in out-lease space into the Portland building and eliminate about $1.2 million of ongoing lease costs that we currently have. So those are the three alternatives that we've developed to try to figure out answer a couple questions that we think are important in terms of making a decision. And that really starts with page 4, where we look at the economic analysis of the alternatives. And the question that we're trying to figure out here is, we've got three options. What's the least cost option? If we have a choice to make, which one should we make based on some way of measuring the long-run cost associated with those alternatives? So what we've done is looked at projecting costs over a 20-year time period. We look at how we're giving up resources to build improvements or to lease space. We look at the savings that we might realize if we're able to bring people into the Portland building. And we take that 20-year projection and we distill it down into a lump sum equivalency using standard financial discounting techniques that gives us an ability to compare apples to apples to apples for the three options. So when we look at option C, which is the utilization and optimization of the Portland building, what we found is that if we compare it to an option where we simply lease space for folks that the growth in the workforce, and we maintain the existing leases in the outlease space, that's going to cost us about $32 million more on a present value basis than by optimizing the Portland building. If instead we choose to buy space, construct new space, we find that that present value cost is about almost $30 million more expensive than optimizing the Portland building project. So based on the economic analysis, it looks pretty compelling that the best decision for us that in terms of how do we deal with the forecast growth needs of the downtown workforce is to optimize the Portland building and to make that investment. So that's what the economic analysis tells us, is what is the least cost option. The next piece of the puzzle is what would it cost for us on a budgetary or financial basis? So what does it matter to us in terms of how we would plan for the impacts of that by bureaus and by funds? And so page 5 takes the analysis that we've done for each option and converts it into some kind of financial quantities, where those options that have us either making investments, we do a financing over a period of time, we have operating costs, we have lease costs and those kinds of things. We translate that into cash flows that allows us to input that into our blended rate model and then determine, based on bureaus and square footages and those kinds of costs, what the impact is on funds or bureaus. And that's what this particular table shows. So for example, under the lease option, which is option A, you see the annual cost by fund or bureau type and the total for that in year 1 of about $28.3 million. The build option, same numbers being spread, about $28.2 million. And the optimization option, which is the additional investment in the Portland building, is about $27 million. So on the last columns on the right, the green column, you can see the cost savings that result from investing in option C compared to option A. And option A, again, is we lease the space as opposed to buying or building space. That saves us about $1.3 million a year. And you can see, for the most part, that there are reductions in costs for most bureaus. Environmental services has a larger expense because they're actually buying more space and bringing people in from lease space. And development services pays somewhat more in the first few years because their space is fixed. They're not being able to shrink the size of their space down as we are able to optimize it in the Portland building. So the unit cost times space gives them the rate that they're paying.
So, could I interrupt?
Certainly.
Could I interrupt for a moment and just ask you a question?
Please.
So you're looking at the present value costs, and I understand that, but I also understand it always depends on the assumptions that go into the model. And I have seen various sensitivity analyses done of these kinds of models to take into account the variation in some of the assumptions. For example, having not looked at the details of your model, I assume you were assuming a certain per square footage rehabilitation cost for the Portland building. I assume you were assuming a certain per square footage lease cost over the 20-year period with an escalator. I assume you were assuming some sort of a net construction cost for constructing new facilities elsewhere as part of option B. is there a sensitivity analysis, or have you had somebody do an independent look at the assumptions that went into the model, just to make sure that what we're looking at here, top line, is not impacted by potential error in the assumptions?
Mayor, we have not had an independent review of that. Let me talk a little bit about the assumptions, maybe give you an
That'd
idea
be
of what we
helpful.
did.
Thank you.
So, for example, the analysis that we've done is called, we've done it in what we call a real terms. And a real economic analysis simply means we're not worrying about inflation. We're not going to project inflated costs, because we're going to discount or use a discount rate that's net of inflation as well. So we sort of wash out the effects of inflation. So that simplifies it a bit. And if we added inflation in, we'd escalate those costs at a higher rate, but we discount it at a higher rate. You usually get to the same spot. So that's one assumption that we have. For the lease cost option, for the leases, for leasing new space, we're using the work that we've done in looking at how where the market is right now for the relocation of the Portland building workforce as part of the project. We've got a lot of information about current lease costs in downtown Portland. And so we're using that as our estimate of what that cost would be for the new space needed for growth. So we're pretty confident that that's a good number. It's been tested in the market. We've had a lot of work done, and we have our own real estate people that have told us what the market looks like in downtown Portland. So that gives us pretty good confidence that that number right now is a pretty accurate number. For the construction option, we've been doing a lot of work on looking at various projects in the downtown Portland. There's been some discussions associated with activities in the IGA, not the IGA, but with work with PSU on a potential for the Jasmine block. We've got pretty good construction cost numbers on a per square foot basis of what that would look like. So we're pretty confident in today's market. We've got a pretty good sense of what it would cost to construct a new office space. We're pretty confident in the O&M expenses, but we haven't done a sensitivity analysis, and we haven't had an outside review of that. On the construction option also, if we owned a building, since it's a 20-year time period, at the 20th year, we end up with an asset. And we've taken that into account in the analysis. We've estimated a salvage value for that building equal to 50% of its current construction cost, and have placed that value in year 20 and brought it back in the present value analysis. And that's one of the reasons why, even though it's a 20-year quantity out there, it's not worth that much. It does change the analysis such that constructing and owning is cheaper than leasing between those two options. So that gives you a little more flavor for the work that we've done. Certainly would welcome other people looking at that. We've actually met with all of the finance managers, and I had invited them and the CBO to review in detail the analysis that we've gone through, to ask questions, to poke at our assumptions. And we've had a lively discussion with those folks, and didn't hear any feedback from them that suggested that the methodology, the underlying costs, or things like that seemed out of place, or that they had questions or concerns about.
Okay, and that's great, and I appreciate it. That gives me an amount of confidence. Could I just ask, did you use the same rate for construction, or for the rehabilitation of the Portland building? Did you use the same cost per square foot as you are for new construction, or did you use a different number?
I believe it was a different number because the Portland building has a lot of different components in it that are unique to it, as opposed to something
So
that's new.
is the Portland building more or less expensive on a per square foot basis?
I'd have to ask one of the folks that are back here. Portland building's less.
Okay, thank you.
I just have a clarifying question. Is it including keeping development services in the 1900 building?
Yes.
And so currently there's other bureaus also in the 1900 building, so I don't quite understand why development services costs go up.
Yeah, the development services costs go up. The other folks that are in there they're probably in the general fund, so they may not see the particular impact. What's a little bit interesting, as we've learned in this analysis, is that so we have bureaus receive their rental costs. The formula is, the rental cost is equal to the blended rate times square footage. So if you think about what's we have a couple things going on. So for example, investing more in the Portland building has the effect of increasing costs and increasing our blended rate, because we're going to be narrowing down the total amount of square footage that we own. But bureaus, because we're able to more efficiently use the space and more efficiently put people into the workspace that they have, they actually see a decline in the square footage that they're using. So again, a higher blended rate multiplied by a smaller square footage can produce savings. So now that's generally. Now we go to development services. Development services has price, the rental rate, times the blended, equals blended rate times square footage. Blended rate is increasing, particularly in years 1 through 7 when we're financing these additional improvements. Their square footage is static. And because of that, they have an increase. In year 8, depending on which option we look at, their costs drop dramatically. Now, one of the things also is that as development services, which is bursting at the seams and looking for other things, is that they may want to look at a way in which they could optimize the 1900 building. And maybe there's an investment that we need to be thinking there about ways to invest in furnishings and fixtures such that we could collapse down the square footage there. Those costs would then become part of the blended rate model, and rate times square footage would result in their cost as well. But that's one of the things that looks a little bit peculiar in here. But when you think about what's going on, it starts to make a little bit more sense why there's some negatives and then some positives. And that's, but development services, because we don't see any change in their square footage. That's what's going on there, Commissioner.
So part of it is the decision that we made last year to go with blended rate, so that development services doesn't really benefit from their building being paid off in 2020. Is that correct?
That's correct. So I just want to kind of,
Is that same analysis true for planning and sustainability?
planning and sustainability would have, their rental rates would be the same thing. Now, again, they're a general fund bureau for the most part. So general fund you see in this category here in this line item. Overall, when you compare the two options, the least cost option is optimizing the Portland building space. So all general fund bureaus, end up being less expensive than if we don't make the investments in the Portland building, but simply proceed with a lease option or construction option. And that's why we didn't break out at the bureau level. We have it either by the major funds, or in some of the cases we split it for environmental services and water, because they're looking to own their space, which is different than everybody else who's part of the blended rate model. They pay a blended O&M cost, but they're going to have their square footage cost, and what they pay is actually based on what they own. And that's a decision that we made with the Portland Building Project because it works better for them financially in their financial model.
I do have just one follow-up question about development services. Is the assumption that it stays at its current staffing level, or bigger or smaller?
Right now we have it, I believe, and I'll look to others, but we have it based on their current staffing level. And
I can just add that we're in the process of trying to fill about 50 positions, but of course, staffing ebbs and flows with the economy, and that's a hard call.
Mr. Mayor and members of council, if I may. I'm John Russell, 200 Southwest Market. There's a subjective piece of this that doesn't result in direct cost savings, and that is to the extent that the bureaus are spread out geographically, the more difficult to control. It contributes to the silo effect of the city. To the extent that everybody is co-located, just from an operational perspective, it's advantageous. And if they're co-located and somebody expands and somebody contracts, then you can accommodate that more easily.
so I wanted to finish up with the analysis. So we've looked at least cost option, in our opinion, is to optimize the Portland building space. When we look at the impacts on bureaus, generally speaking, in the aggregate, costs are lower than if we proceed on the current path we're on, because we're really, with the Portland Building Project, provides this fork in the road opportunity. We're either going to build it the way we're planning to build it, which is move everybody out, move them all back in, or we're going to do it more efficiently and differently and take advantage of the opportunity to accommodate growth and to bring in some of that lease space. So that's really the reason why we're here, is because we have to make a decision about that. From our point of view, and we kind of summarize it on page 6, we're going to be able to, the result of optimizing the Portland building allows us to bring in that growth space, that forecasted growth space that we've uncovered during the conversations with bureaus, that they say they're planning to have 220 more employees in the downtown in the next 5 years, or by 2020. We can bring in 192 people that are in existing outlease spaces into the Portland building. We can make more efficient use of the reconstructed Portland building. And we can avoid costs of locating growth employees in lease space or newly constructed space. So again, kind of spreading people out, we'll be consolidating them into the Portland building. We know that in a lot of the work that we did in the run-up to the Portland building project with blended rates, that long run, the best thing for us is to be in our owned space. That long run, that's cheaper. It takes us out of the market for leased space and the fluctuations in market rents over time. And then move costs and flexibility of being able to reorganize and reconfigure space with a uniform set of furnishings and fixtures for every floor of the building. There are some other savings and potential benefits that we haven't calculated or brought into the analysis that we think would be present as well. So, really where we're at now is the opportunity to make a decision one way or the other. If the workforce continues to grow, which bureaus tell us it's going to, we're going to be confronted with the need to acquire more space. And the question for us is, what's the best way for us to do that?
So, can I jump in with a couple of questions? And I don't want to, I know you have other parts of the presentation, but I want to put down 3 markers, and hopefully we can address these issues during the course of the work session. The first is, have we evaluated the impact on employees of creating a more dense workplace? Having gone through this process before with the Housing Bureau, where we had the workforce actually help us devise the space, and we got a lot of input into how to maximize worker productivity, but also to make the workplace a place that people want to come to work in. I want to be sure that that if we're adding 192 employees, we're not diminishing the quality of life of everybody by just sort of stacking everybody on top of everybody. So that's a philosophical question, and I'd like to know how you measure that.
Could I just jump in, Commissioner?
Yeah.
I'm sure there's probably studies being done about the optimal number of employees per square foot. So if you have that kind of information, I like Commissioner Fisher would be very interested to hear it.
If I may, to a large degree, it's a function of the furniture systems. If you're looking at a canvas-colored wall like Dilbert, reduce it. Sorry. You're looking at old-fashioned canvas-colored walls, separating spaces. That's a very different circumstance than today's modern furniture systems that have lots of places to store things and movable height of desks and all that stuff.
I'll put all 3 issues on the table, and then we can take them up. So I would say just generally, I'd like to know what the impact of putting more employees in is, and I'd like to have a reassurance that if the council at some point chooses to go down this path, that we will engage our employees in actually designing the workplace so that it, again, meets their needs and is a place that people want to come to work. Number 2, since we have some new people at the table, let me go back to the constant refrain when we started this exercise on the Portland building, and that was a hard cap on city's investment in the building. In fact, I think I heard Dan Salzman say that about 5,000 times during the course of our deliberations. And so someone out there is going to be watching this hearing and thinking, aha, these crafty, shrewd people at OMF have come up with a way to blow the budget cap, but couch it as being in the public interest. So talk a little bit about that, because I think what you're likely to tell us is that if we don't choose this option, you're still operating within the hard cap in terms of the renovation of the building. So it is apples and oranges, but I think we have to make that clear so no one perceives this as a creative way of adding to the overall budget of the Portland building. And the third thing I want to flag is that, again, for the benefit of the new colleagues, there's another part of this history that we have to daylight and address, which is the commitments we've made to Portland State University around space. And we could spend the entire work session talking about the Education Urban Renewal District, its demise, the new agreement that we reached around an expanded North Macadam, and the MOU and letter of intent that we signed with Portland State University. But there's a rich history there. But at some point, as we sunset the Urban Renewal District and we came up with an alternative, we gave a very strong signal to Portland State University that we were going to partner with them on a new space. In fact, we made a commitment that, while it's not legally binding, was stated pretty emphatically in some legal documents, and upon which PSU has relied in getting in the queue for state funding, and in fact, they're getting ready to move forward with that project. So I'd like to bring that into the conversation because my sense is that depending on the option we choose, it could have an impact on what we do with PSU. That in turn could cause us to reconsider a host of options, including the future of the 1900 building, the option that we have in terms of being a participant in a new construction and other things. And I want to make sure that we have a clear understanding of the impact of each option on some commitments that we made to PSU 2 and 3 years ago, which I think, whether they may not be legally binding, I think in fairness, PSU acted reasonably in assuming we were going to be partners in at least one development. And that may not be the case if we choose one of these options. So I want to daylight that as well.
Thanks, Commissioner. So forgive me if I go a little out of order on the list, but I want to address some of the questions that you raised. I think that the description you used about the hard cap, I could not emphasize any more that our new mayor has probably said that as many times as Commissioner Saltzman has said it in terms of the hard cap on the construction of the project. When Ken mentioned the fork in the road, that's really what we're at here in terms of we are committed to being on time and on budget with the Portland Building Reconstruction Project. If the council directs us to do it in terms of the original model and that construction budget, we'll proceed with moving everybody out and moving everyone back in with the old cubes and the old system. What we're presenting to you here is part of our responsibility to make sure you know all your options on your long-term operations and maintenance costs and what it's actually going to cost you for the downtown employees. So we are emphatic and clear that this is a separate investment in terms of the city's long-term space needs because it includes all the different bureaus that we could consolidate and all the future employees that we don't have yet. But we are very committed to the 195 cap. On the Portland State question, we are very sensitive to this and have been, we met with Portland State leadership before this work session. We briefed each office. And we've also started talking with the Development Commission leadership about what the options are there. We understand the long-standing partnership and the commitments made there. What we are saying here is we believe we have options for the investment that can make the general fund and the other funding sources of the city whole over the longer term. And we believe that the Development Commission is open to figuring out how to continue that partnership on the Jasmine block with their own tools. I met with Director Branham from the PDC a few days ago. She says they're already starting that conversation. So if council directs us at the end of this session to pursue the option that we are recommending, that does not take the Jasmine block and the partnership with Portland State off the table. You could also direct us and the Portland Development Commission to see if there's options there as well. So I wanted to make sure that I addressed that. I believe you also raised the, how is it a healthy work environment? So I invited our illustrious architectural partner up here to address that. Carla?
Yeah, okay. Carla Weinheimer, I'm with DLR Group. I'm the lead architect on the project. Just wanted to say in response to your, have the employees been engaged? Absolutely. That's number one. Right from the start, visioning with the bureaus. What we were asked to do was to bring vision to this building in terms of what is the workplace, not just of today, but of tomorrow. Where is workplace going? And workplace means, you know, what are people doing in offices? And we were asked to bring, we have a national practice in workplace. We were asked to bring our standards and what we've seen nationally happening. Where is workplace going? And what you currently have is something that is probably not even the workplace of today. And so, and I don't mean that as a criticism so much as this is what's so great about this project, the opportunity to really think about what that means. And so we've done that with the bureaus. We showed them the kinds of things that they can achieve. And doing a right sizing with what I'm gonna call a kit of parts of furniture, a new type of furniture system that right sizes each place for exactly what that particular type of employee needs. Gives you a lot more flexibility than a standardized, everybody's in the same size, you know, so the kit of parts, and that's where workplace is today. Everybody's looking for a more flexible environment that you can shift depending on whether you want collaboration or not collaboration, depending on whether your employees are out of the office 90% of the time and they really just need a check-in space. So it's allowing the bureaus to have the flexibility to make exactly what they want. One of the cool results of that, though, is you also optimize your space. And I think that's really what this is about. If we have that opportunity to optimize what's right for the bureaus, to give them that flexibility, we also have the benefit of optimizing the space. And that's, I think, one of the main reasons we're here today.
Could I ask a question, please? So, as you know, I was fairly skeptical of this project, and I still have my questions and concerns. Why wasn't this considered as part of the original concept for, I mean, space optimization, considering where our leases are, looking at what makes our employees effective in their jobs? I mean, this is like entry-level stuff. Why are we asking whether we want to support another $18 million addition to this project to do it? Strikes me as pretty elementary work. I mean, make me feel better about this.
I'll take a shot. I'm not sure I'll make you feel better, but having been involved in the project over the last couple of years and been in a lot of the meetings and discussions about it, you know, the project has, you know, started as kind of a rehab, a rehabilitation, seismic, and got bigger in terms of when we started realizing what the thing really needed. And the focus had been on, you know, the existing footprint of the building in terms of employees and taking them out and bringing them back in. I think, and I agree that if we had known earlier what we know now, I think the discussions with the bureaus in terms of planning for their space and their needs uncovered something that hadn't been anticipated, hadn't been seen by the team, and that is people say their bureaus are going to grow and they have more space that they need. And that was something that hadn't really been a focus until we got further into the project in that collaboration with the bureaus and trying to understand what they wanted, what they needed, and figured out that all of what they want can't be fit back into this building unless we do some things differently. So unfortunately, you know, that got uncovered after we, you know, started the project, kind of committed to the 195, and now see an opportunity. So that gets us where we're at today. And so if we had known that, we would have brought it back to you, and we probably would have had an opportunity to have that discussion and would have made the argument that it makes sense to integrate that into the project budget, because the alternative of not doing that means we will spend a lot more money.
Can I just jump in on one thing? Because I want to defend my good friend, John Russell.
I need that.
You know, there's one of my favorite expressions is, you know, I went to the fights and a hockey game broke out. I think one of the answers, Mayor, is that this was scoped as one challenge and one project. And in the course of doing all this work, we've learned that we could actually get a twofer. And the reason that I think probably most of your colleagues are not so concerned about the timing of this conversation is that nothing has happened that precludes us from addressing this going forward. I think your concern would be more urgent if somehow we missed a 5-year window backwards to capitalize on this. But the fact is, we're still thinking forward-looking because we are currently planning to get everyone out of the building. We have interim space uses, and we're talking about how the building is going to be used sometime in the future. Along the way, the team working on this has said we can get a twofer or a threefer. I would actually say this is about government working at its best because they've rescoped the project and come back and said we can get more value out of this than just protecting the integrity of this building. And we've not lost any opportunity because it's a forward opportunity. It's not something we could have seized before and would have had any impact on our current investment.
My understanding was that the original plan was really about rehabilitation and retrofitting because there was so much wrong with the building out of the gate, day one. I thought this proposal was really exciting, and I just wanted to add to what you were saying. As far as accommodating more people, it's not just about the kit of parts, it's about creating common spaces for all the bureaus to share where they now have several dedicated spaces throughout the building that are being underutilized. Could you talk about that at all? Or
Certainly. Some of the ways that we're also adding, I want to say, value is by so shared space, the concept of shared space, which leads to collaboration and not having each bureau doing their own, trying to get all their own conferencing, all their own needs met within the walls of their bureau. So, working with the bureaus on how to optimize, again, that word, optimize space by doing shared conferencing, by having places where different kinds of experiences can happen for the employees for collaboration outside of the cubicle zones. So doing that and also optimizing the building relative to, say, not having our mechanical on a floor that we can now use for conferencing on a second floor, which is a public floor. So really we as a design team are really looking at how can you best optimize this asset. That's what we like to do. We like to make this investment, which is quite large for the city, to actually put you in the best optimized position moving forward, because things always change over time, and we wanted to give you the most flexibility.
Mr. Mayor, if I may, I'm not sure this is comfort, but obviously the way people have used office space has evolved slowly over time. But the rate of change in the last couple of years has just been stratospheric. It's been the cutting edge way people use space is dictated by the high-tech industries. And it's a dramatic change from what was even the case 2 years ago. So if the Portland building didn't have seismic and leakage problems, you would have had to spend a ton of money to bring the office space needs up to what is cutting edge today.
And maybe we could have our partner Cindy Nickel from the Port give us a little flavor on that too. And thanks to both John and Cindy for being here. Really appreciate it.
Great, thank you very much. Good morning. I'm Cindy Nickel. I'm Chief Financial Officer of the Port of Portland. And you have a presentation in front of you. I'll do it in about just a couple minutes. But I just wanted you to know we actually consolidated a lot of our staff in one place in 2010. So we had about 430 people. Most were we had a downtown building, headquarters. We also had many people at the airport in offices where TSA is now. But we also had people in our various marine facilities spread out all over. So, sorry I don't have page numbers, but if you look at the page that has the picture of the headquarters building, you can see that what we did was we built 3 levels on top of the new parking garage, which is a 7-level parking garage at the airport. So as you're coming in the airport roadway, this is what that view is. So that funny curve at the top is our offices, actually. And I won't go through all the details of this space. I would say that we did create space for about 480 people. We were moving 430. But we also have a lot of shell space, which we can build out later. Same kind of concept. The ideal was to have room to grow for the next 30 or 35 years. I'll just shift to the next page, which is some of our guiding principles. Some of these are items that you've already raised for yourselves. We wanted to have one port. We wanted to facilitate collaboration. We've really found that that's made a big difference. It was a 12-mile difference between our headquarters building and the airport. A lot of people spent all day long driving back and forth. We also wanted a flexible layout. And we wanted the space allocated to people to be based on their functions, not on their level or their position within the organization. So if you turn the next page, I'll just do this one really quickly. Environmental stewardship. We had a very ambitious program in terms of environmental goals. And at the end of the day, we were pleased that we achieved LEED Platinum certification, being innovative about water conservation, energy conservation, air quality, and life cycle concepts. This slide, perhaps the next one, the cost containment and efficiency slide, is really kind of the nut of it, which is having everyone in one building, as I said, reduced the travel time and increased efficiency. Plus this collaboration, there's a intangible to that about being a more effective organization. We did go to standardized workspace design. We moved a little bit of furniture, conference rooms and some tables, but most of it was new standardized furniture. And by going to that kind of structure, we were able to save 50% of our furniture costs. So we went from $3 million to $1.5 million in furniture costs, which was very significant. And the other thing I
Could you
would
tell me,
mention-
how does this, that's obviously a huge savings.
Yeah.
How does the standardized furniture save you those dollars? What is inherent about it that saves the money?
Certainly, it enabled us. It enabled us to use the space more efficiently, and therefore put more people into one space. And for example, so the space that the TSA is now in the terminal was our space. So now we're renting that to them. So there are a lot of benefits by standardizing. We went to 9x9 cubicles. I think the city's at 8x8 now. But doing all that really helped. The other thing, in addition to using standardized furniture, that really helped us was we did a cooperative procurement contract, which enabled us also to save a lot of money. So that's working with piggybacking on other governmental entities and being able to access lower costs by doing that. So the sheer volume of the amount of stuff we were ordering, the economies of scale helped us, and then the cooperative procurement contracts. And I just want to mention that the building cost, the headquarters part, the 3 floors cost us $85 million. A little bit of a sense. And then I'm just going to do this real quickly, but there were a lot of issues that we had around community. And we were able to really achieve some great numbers in terms of involving small businesses, apprentices, et cetera, in that project. And then just for your sense of what it looks like, this is already old, as you said. So we did this 6 years ago. If you look at the pictures, so we have one that looks from the 10th floor down to the other floors, and you can see what the low-level cubicles look like, what the open space looks like, the use of light, and materials. And the standard furniture, you can see what that looks like. Turning the page, I don't think you'll have an opportunity to do this, but we have an atrium in the center of the building that cuts between the 8th and 9th floors, which enables us to it basically functions as an auditorium where we can fit over 400 employees basically in those seating and looking at the rails over that. Next slide shows you just again sort of a view of some of the furniture. It shows you what a private collaborative looks like with a door that closes. So again, gives you a little bit of feel. And then the last slide shows you what a standard area of cubicles looks like. One thing I would mention is that we did give employees options. We let them pick the kind of chair they had. We let them pick whether they had a guest chair versus a pedestal for more storage. So while it was standardized, we did give employees choice, and we consulted with them extensively, which we found to be very useful.
So I guess I just wanted to plant a thought, and that is, we're talking a lot about space optimization, being on the cutting edge. And I'm not, I remember, Ken, you told me an example. I think you have a relative who works at a law firm in Chicago, and she has to reserve her office space every day. So, I'm not sure we want to be that cutting edge. I don't think we want to be as cutting edge as state-of-the-art high technology companies are, because, they come and go, and they're in lease space primarily. We're talking about own space. So I'm just, I just want to say that I think we have to provide some level of comfort. I want to do better than what we're doing now, and I like the idea of standardized furniture, but I'm not sure I want to be on the extreme. I'm not sure our employees want to be on that extreme either. So
I don't think that's what we're proposing here, Commissioner. It was my example was kind of a stunner. I went back to Chicago for the holidays, and my sister-in-law works for Jones Lang LaSalle, and that's a big property real estate firm, downtown Chicago office building. She's a lawyer, and the whole law department is in this hoteling concept. So what she has rights to is a file cabinet drawer where her working papers are each day. She gets that each morning and gets assigned a work area. Logs into a computer, has her working stuff. At the end of the day, she logs out and takes her working stuff back to her assigned space in a file cabinet. And the reason why they do that is that on any given day, 30% or more of the lawyers aren't in the office. So downtown Chicago office space is expensive. If you can neck that down and not assign things to people, better able to manage that. Now that that was a real eye, and she's still struggling with that, and so it hasn't, not exactly well embraced in their offices. But Jones Lang LaSalle, because they consult to many businesses and corporations on space, they feel like if they're going to be selling those kinds of things or discussing that with their clients, they need to understand how it works as well. For some pieces of the city of Portland's workforce, maybe that might work. For most of it, absolutely will not work, and that's not what's being proposed. But there's the continuum of how people use space. That might be the extreme. But when you start thinking about it, what companies are trying to do, and I'm not saying we need to emulate that or follow that precisely, is how do we make the best utilization of the expensive real estate that we're investing in? And tomorrow we're going to be presenting the CAFR to the council, talk about our financial report, and you're going to hear from me again the message about long-run financial and fiscal sustainability, and our problem is a math problem. Revenues grow slower than expenses, and expenses are driven by people. Wages, salaries, benefits, and what it costs to put a person in a cube in a building that we own so they can do their job. If we can be more efficient in any of those pieces of that puzzle, including the facilities costs, that's helpful long run to bring us into balance. And so it's really about how do we give people what they need to do their jobs and do the jobs effectively and can thrive in that environment, but to do it in a different way that allows us to get more efficiency out of it.
Just building on what Dan said, I want to compliment the port for the way they've configured their space. We've all been out there for meetings and other things. But I also think it's a cautionary tale in the following respect. The thing that what we've always struggled with in the Portland building is light and air. And it is the significant limitation. And what you have done at the port building so well is you have maximized light and air through an atrium, through all the plain glass window. And so again, it goes back to, as we're trying to make our space more efficient, our space has great limitations. And the fact that it doesn't have big windows and it doesn't have light and air is one of the reasons why we get chronic complaints from our employees about the quality of life in their workplace.
One of the aspects that hasn't been touched on, because we're talking about square feet, you don't experience space in 2 dimensions, you experience it in 3 dimensions. And one of the things that is a fundamental change is, well, for every space, whether you're talking about a closet or a cathedral, there's a correct height for every width and length. And if you're looking at a floor size of the Portland building, which is darn near an acre, and it's an 8.5 ceiling or a 9-foot ceiling, it is claustrophobic. It feels terrible. If it's divided into offices, it feels right. That's the right proportion. And so to the extent that you use open space, you reduce the number of offices, you really have to demolish the ceiling. And so, I did the building across the street, PacWest Center. It has an 8'10" suspended ceiling. It was great for Merrill Lynch, Pete Marwick, and IBM. But increasingly, those ceilings are being taken out. Well, because there's several feet, probably 4 feet above that ceiling that's occupied by mechanical. Well, if you take the ceiling out, the mechanical, which had been hidden, isn't suitable to be visible. So if you were to do nothing with the Portland building other than fix that problem, you would have to demolish the ceiling, replace the mechanical, and spend a ton of money just to make the space comfortable for somebody in an open office environment with a 30 or 35,000 foot floor. And if you look at Cindy's pictures, the last couple of pictures, it shows the fact that you're dealing with exposed mechanical spaces and relatively high spaces. So buildings are built with high spaces. They just truncate it typically.
So if I may just weigh in on that, I completely agree with you. The great thing about this project is fundamental to the base project was the replacement, or not replacement, but the fixing of the exterior and complete replacement of the mechanical systems. So that's going to happen. One of the results of that is we have the opportunity just doing that to absolutely, we're going to recommend that ceiling not be where it is today, and that we have the opportunity to open it up, and certainly in working with our trade partners, many buildings in Portland are now going that route, and they're right on board with making it look good, even though the mechanical is showing. And so I want to add just one other piece, because light is a big deal. Air and light, as you mentioned, absolutely critical. The new systems will remedy the air issues in the building. The light issues, it's going to be hard to understand until we get a little further along, but it's really an opportunity on the exterior. We have an opportunity to bring a lot more light into this building because there's so many places where we're actually able to increase glazing. It's hard to kind of get into that without a little more detail. Anybody that's interested, we certainly come over to our space. We have a model you can look at, but there is really going to be a transformation of light into that building. And it's something that we have discussed with the bureaus in terms of that kit of parts, how the furniture can help support increasing light and the continued healthy air, because we're going to be creating an environment that allows, with the openness, for there not to be a lot of chopping up, which ultimately, as well as engineers can do it, often leads to some sort of disconnects in the way the air supply is. So we're really working on those two issues, all of those issues. And as you mentioned, absolutely every opportunity to get that ceiling higher.
I wanted to address one thing that the mayor raised, which was the implication that this is an additional cost to the project. And I have wrestled with this as a new person in my role. What I have come to realize is that, and this is a hard thing about articulating this proposal / idea, is that we want to underscore these costs are there. You're going to have these costs. This is a choice of how to manage those costs. You can either, your choice to direct us to manage it, and we believe save a lot of money in terms of the proposal that we're putting forward, or you can continue to manage it as the city does right now, which is in the outlease spaces and new construction. So I want to make sure, I think that's a delineation or fine tuning of your point. I also want to point out that I'm not sure that the mayor and Commissioner Daly know this. I'm guessing that the commissioners who have been around do know this. The bureaus own and manage and buy their furniture independently at this point. So an interesting and I think provocative and healthy part of this proposal is that this is a shift away from that and to take advantage of economies of scale throughout the city. It also would not preclude bureaus that aren't a part of the consolidation. Sorry, thank you. Thanks, Amanda. It would not preclude bureaus that are not a part of being in those furniture purchases. So, in case anybody didn't hear the first 3 times I said it, it would not prevent bureaus who are not a part of this consolidation from participating in a large-scale purchase of furniture, which is another thing that we should be moving to, that we should be purchasing more of our things together and achieving those savings. So I just wanted to make sure we made those points, and I know Ken has a couple of other pieces there.
I just wanted to add another thought to the issue around Portland State University, and you heard Tom talk about this, a lot of discussion still with PDC about how to manage the commitment there. I think the important thing to note is this. If we make a decision to be more efficient with the Portland building and bring people into the Portland building that are in outlease spaces, that's the least cost option. If we're going to proceed with Portland State, that just adds another cost on top of that, but we're adding it on to a lower set of costs. We won't have everybody back in the Portland building. We'll bring in a lot of people in that are in lease space, but there's one division, it's my division, the revenue division, that's in the Columbia Square that would not, their footprint is big enough that we don't expect that they would come into the Portland building reconstruction when we're done. So if we had other space in the downtown that we needed to invest in, it would be a perfect opportunity to put them into owned space that we have. There is a lot of discussion about the needs for development services and BPS and whether they would have a need for additional space. So I don't think the Portland State issue, how we manage that, should get in the way of making the best right decision about the Portland building. Because if we make a good decision there that reduces our costs, then as we look at the cost of doing what we need to do with Portland State and address other parts of the space puzzle, if you will, that aren't part of this optimization, we will add to that and build on something that is less expensive to begin with. If we don't make the less expensive decision now, and we proceed with that direction, we'll be adding more costs on top of that. So I don't think they're mutually exclusive. I think they work together, and they allow us to long run manage and reduce those costs for the city.
So it would be helpful to me, Mayor, just to know what the timeline is on that piece. And since this is a work session, I would request, can I ask Raylene McMillan to come forward and just give us the timeline for PSU decision-making? And I appreciate that we're saying that they may be mutually exclusive, but if PDC is looking at options, I'd like to know what the timeline is for us to come back, and we invite PSU's lobbyists to come join us for a moment, to come to the table. Sure. So just to tee this up, I was on the council where we made a commitment of PDC resources to a partnership with Portland State University, and the council adopted that vision. A new mayor came in and reconsidered that approach, and at the time, one of the concerns the council had was the perception that we had made a commitment and we were now reversing course. So a lot of time and energy went into a second plan where the city made commitments around a partnership with Portland State University that was mutually beneficial. That was memorialized in some documents, and I'm loath to have a second opportunity to backpedal on commitments we've made to a critical partner in our community. And so my question to Raylene and her team is, where are you in terms of the sequence, the planning on the Jasmine block, and when would you need some kind of indication from the city as to whether we are in fact participating in that project or not?
Thank you for the invitation, Commissioner Fish. Mr. Mayor, Commissioners, for the record, my name is Raylene McMillan, Associate Director of Government Relations for Portland State University. I'm going to turn the question largely over to Jason Franklin, who is our Director of Campus Planning. I will indicate, in terms of where we are in the planning stages, we are about to go into design right now. And as was earlier mentioned, the city's funding for this project is critical to get our state match. If the council is interested, we are also accompanied today by PCC Government Relations Director Emma Calloway, who is over here. PCC also has a very vested interest for their bonding purposes to see that this project remains on time. Not only would it be very devastating to the project to have the city pull its $15 million commitment out, but in terms of the timeline, even having some more time to ponder, so to speak, would also put a big damper in the project. As we know, the legislative session starts tomorrow, and our state folks need to be able to go down with this narrative that this partnership is intact. So I'm going to turn it over to Jason to talk a little bit more about planning timeline.
For the records, Jason Franklin, Director of Campus Planning, Portland State. So the short version is that we will be in front of you, if everything goes forward, with a development agreement, which is the legally binding instrument that would say, yeah, the city is committed to their portion of the project before June 30th of this year. And we need that in place in order for us to begin design on July 1st. And the July 1st date is necessary because PCC and their dental clinic, which is low-income dental clinic that'll serve folks in the central city here, needs to be operational by the fall of 2020. So it's a fairly aggressive timeline. As Raylene said, we've been working towards this for a number of years now. This discussion started back, I think, in 2014. We've been working with our partners, including the city, for the last 6 months and the last 3 months on a pretty intensive programming process, sort of all moving in this direction. And there's a draft of the development agreement city staff have that they're currently reviewing. And so again, we hope to get that in front of you for your approval.
Just to clarify, that you have a pending ask for bond money from the legislature, is that correct? And how has this project been ranked?
Oh, thank you for the.
Okay.
Sorry. Thank you for the question, Commissioner Fish. The project is actually ranked #1 on both the technically #2 because deferred maintenance for the university capital construction is always #1, as it should be. So #1, directly below deferred maintenance, the Higher Education Coordinating Commission has ranked this project #1 on their list, and we saw that in the GRB, the governor's recommended budget as well. So both the HEC and the governor have ranked this project #1. We feel extremely confident that this project will be funded in full if the city remains an intact partner.
I think that's helpful. Mayor, I think that's helpful in terms of whatever guidance we give to PDC to come back with options. I'm a little out of date on the larger space conversation, but there have in the past been conversations about selling the 1900 building to Portland State, with the downsizing of PDC, about thinking about different options for their space. It seems to me that your earlier comments suggest an interest in looking as holistically as possible about this question, and if there is a need for this space, either contingent or for repurposing and shifting people around, or if we determine that through some other partnership, we think having space on Portland State University as incubator space or whatever is beneficial, we're probably going to have to make that decision in the next few months. And while I appreciate you saying these are mutually exclusive, I want to make sure that we have recommendations coming back that address both.
So, Commissioner, in answer to your question, the answer is yes. I am a huge fan of capital planning and prioritization, and it sounds like the council has already made its prioritization.
So are we ready to move to recommendations, or do you have more questions or comments on what we've laid out? I want to again thank John and Cindy for coming and for all their advice on the project that predates me as well. Any other questions, or Ken, anything for you to add?
So, Ken, you are our independent chief financial officer. So would you just walk through briefly your recommendation to the council?
Yes, Commissioner. So the analysis that we've tried to set forward in front of you today really, gives us the opportunity to look at the fork in the road that we're in. We've learned that we're going to need more space in downtown Portland. The question is, how do we plan for that? Through the work with the Portland Building Project and project team, there's an option that allows us to do that by investing more money in that building. But we have to make that decision more or less now, otherwise that opportunity goes away, which is fine. We think that if we decide that we don't want to do that, we will have growth, and we will be dealing with that. Our analysis suggests that if we go down the pathway of leasing that space in the market going forward and miss the opportunity to realize some savings associated with investing more into optimizing the Portland building, that'll cost us about $32 million. Present value lump sum equivalent today. We could go and build a building or a part of a building, and that option is about $30 million. So it seems to us that we're at this juncture that we're at, that if we're going to be faced with the need to provide for an expanded workforce in the downtown, that the best and cheapest option for us is to make a decision to optimize the Portland building and invest that money now. Now, so that's my initial recommendation. That's really what the purpose of this was, to flesh out those opportunities. We know that however, it brings up a question about Portland State and other space needs that are not accommodated or addressed completely by this particular decision. There are other things that we have in terms of other bureaus out in the downtown that could be brought into that space. PDC could be brought into that space, and we can make that investment as well. It really boils down to, we're going to be faced with these costs. The question is, which way do we want to address those? We have a chance to minimize some of that cost, and we'll add more to it. But if we don't minimize those costs to start with, at the end of the day, the sum of all the costs will be greater. And so that's really the question you have in front of you, I think, is that looking at all of the different things that are in motion at this point in time, how do we make sure that we don't miss an opportunity to save substantial dollars now, recognizing that we will be spending that money based on the projections that have been made one way or the other. And my recommendation to you is, given where we're at in the fork in the road and the opportunity to better utilize the Portland building based on what we've learned, that would be my recommendation to you, is to proceed with that option.
Thank you. That's very helpful. In fact, this whole work session is very helpful. Obviously, we can't make any decisions at a work session. Where would we be thinking we would get that additional money?
The assumption that we've made is that for the furniture and fixtures and those kinds of things, we would do a short-term borrowing, about 7 years. It would be based on the estimated useful life of the furniture and fixtures. In fact, some of the improvements are probably a little bit longer life, but that's a pretty conservative assumption. So we would do a borrowing associated with that. We would translate that into debt service. We would build that into the blended rates, and we would have that begin in 2020, 2021.
I just wanted to ask a question again related to the commitment to PSU. I guess, first of all, and I know you just showed it to me, Commissioner Fish, but is our commitment to a certain amount of square footage, or is it to a dollar amount for this, or both?
My understanding is we were talking about a floor of a building up to 30,000 square feet, so basically a
So
floor.
it's a square footage?
Yeah, that's my understanding.
And so you mentioned the revenue division and PDC. Are those, I don't know how big revenue is, but you just said it's too big to move into the Portland building. Is it too big to move into a floor at the Jasmine Block?
Your revenue division probably would be a good candidate for a floor of the building. I mean, one, they have, if you haven't been to their operation in the Columbia Square, if you have, you'll see it's quite a big footprint there. They have some, peculiar needs as well because of security around data and confidentiality. Some place that can be designed for their needs would be very helpful. That space that they're in the Columbia Square building is really taking that into account. Private areas where they can meet with taxpayers to discuss tax-related issues and things like that. Security in terms of who can enter and have access. But they have a pretty big footprint. Whether they would take the entire floor or not, I think is a question, but they would they're probably close to taking that much space. And so when we were looking at, in the Portland building, bringing folks in, they're sort of if you bring in all the other leases, there's not enough for revenue. And I think one of the questions we had is what happens if the city doesn't grow? Well, one of the options there is you bring the revenue division in the Portland building. If you have a bunch of space, you have people you could bring in. We expect that there's going to be growth. That's what we're hearing from the bureaus. But in terms of a new facility or a new building at the Jasmine Block, they would be a perfect candidate for a tenant in that building.
In a position to make, I guess it's probably our decision, but, commitments on a timeline that would meet PSU and PCC's needs with respect to the legislative approval or not of this project.
My sense that those are decisions that are completely under your control. So if that's what you direct that we do and understand what that means in terms of budgetary and financial implications when we translate that into the actualization of those costs, that's certainly within your control and would be done under a framework of time consistent with what I think you just heard from Portland State.
And presumably that would come to a public hearing before council to make that decision.
Absolutely.
Yeah, I'm trying to remember what we did when you remember I didn't support the education URA, but then when Mayor Hales was looking to rescind it, I recognized that we had made a commitment to Portland State University. So can you remind me what we did as part of that education URA being changed?
I would love to be able to do that, but I think that may have happened during my interim when I wasn't here. So I wasn't a party to that, and so don't know exactly all the details.
So Ken, I'll bail you out on that one. Commissioner Fritz, I have the electronic version of the documents, and the complete list of partnership opportunities is 7 pages, and it was a series of things we were going to do together. Some funded with TIF. The Jasmine Block, for example, was a PDC property which was conveyed to PSU at no cost. Some with other commitments like investments because of space needs. And the interesting thing about the Jasmine property is that the city negotiated the option to lease or purchase. And one of the things I hope we can get back in our analysis is if we, for example, decided that long-term it was better to purchase, given the market conditions, is that a commodity that we can then, if for some reason we couldn't use it all, can we in effect sublease with a partner to make sure that the taxpayers are held harmless?
Well, our colleague Jillian back there from the Development Commission will correct me if I'm wrong, but the conversation I had with Kimberly, the Portland Development Commission Director, Kimberly Branham, indicated 100% support to looking at options. So in the spirit of just offering potential solutions for what I'm hearing here, you could direct OMF to come back with implementing the space optimization ideas that we put forward. You could direct the Development Commission to come back with options that we could also work together with them on. on the Jasmine block. I think those are the two things that I'm hearing that are consistent here. And unless Jillian jumps up and tells me I'm dead wrong, I think that's probably the responsible way to go forward.
So I've got a couple of asks as well. Number one, I would want to know whether we're precluded from condoizing the Jasmine block. In other words, could we own the equity in that and have the option to either sublease it or sell it to recover our equity in that? Number two, Mr. Rust, if you could get me some sort of a estimate of what the financing costs are and what the financing strategy would be with regard to the space optimization program, that would be helpful. I would also like to know if we were to prioritize the space optimization strategy and the new furniture and the open space and the collaborative working environment over other factors already worked into the cost estimate, could we back out some of the already assumed costs in the pro forma that are under the cap that Commissioner Saltzman referenced? And then just sort of lastly, I agree with your fork in the road analogy, and it's been used a couple of times today that we're at this fork in a road. I don't like to navigate by fork in road. What I'd prefer we have is a capital construction plan that serves as a roadmap, so we have a clear understanding of what our next best dollar is in capital construction projects. It's a little disconcerting to me today to hear that we've made this commitment, or prior administrations have made a commitment to PSU without even a clear understanding of why we need the space or who we're going to put there. That's disturbing to me. And then on top of that, I've already expressed my opinion about open collaborative space optimization. I don't think they're quite as cutting edge as people are saying they are. I was part of a company move back in 1999 where these issues were very much top of mind in terms of our strategy and our planning and how we wanted our workforce to interact and collaborate and who we wanted located where and what we wanted the environment to be like. But I'll just take everybody at their word today. So with those three things, that would be super helpful for me. And I'd like to know what the state of that roadmap actually is.
So to be clear, Mr. Mayor, estimate on financing costs in the current model that we proposed today, space optimization, whether those savings could be realized under the cap. And third, could you clarify, or a portion? And the third idea or the request that I heard was something about the capital construction plan. Are you saying you'd like to see this in the context of a full capital construction plan?
It seems to me that given that we are a major investor in capital construction projects in this community, there should be a clear list of what our priorities are. And so that's what I'm looking for.
So in terms of the question that Ken just posed, as Commissioner Fritz said, we can't make a decision on the merits today, but I will speak just as one commissioner. I would welcome a future council presentation on what the optimization would look like. So you're looking for guidance as to whether this is something you should further develop and bring back to council with some sideboards. So I am willing to consider that. You think you make a persuasive case in terms of the three options, and it's the mayor has said he wants to see the 30,000 foot look at capital construction and our investments, and we welcome that, of course. I want to make sure that we have a clear strategy for how we're going to address a commitment we made to Portland State University. That's one part of that, and I would ask that that be done concurrently with whatever recommendation you bring forward on the Portland building.
One thing I'd like to add in response to your question, Mayor, about the nature of our ownership arrangement in Portland State. There's been, the discussion I've been part of so far has anticipated that we would have some type of we would be an owner of whatever we are investing in, and that it would be a condo-like arrangement, similar to what we have with the archives building. So we have a model with Portland State that's been utilized already. So that would give us the rights as an owner to use it, pursuant to the condo agreement or whatever dictates the way in which the building owners would be able to use their space. The only real restriction we have, since the assumption is that we would finance our costs with tax-exempt bonds, we'd be subject to who could use that building based on the tax rules associated with tax-exempt bond financing. So if it was another public entity or something like that, generally not a problem. If we were to sublease the space, because that made sense, to some sort of private entity, could potentially create a problem with the tax status of the bonds. But those are things we deal with and manage all the time. But generally speaking, we want to be an owner. It's important for us to be an owner. We've done it before in partnership with Portland State, and the discussions so far have anticipated that we'd have something similar that would look like that.
Thank you, I appreciate that. Are there any further questions or comments?
Mr. Mayor, we told you 90 minutes, so we're trying to hold to that.
Mr. Reinhardt?
Are we at 90 minutes?
You guys have done a fabulous job. You're actually early. So there being no further business here, we're adjourned. Thank you for.
Oh,
Commissioner Udall.
Oh, I'm
has
sorry,
something- yeah.
Commissioner, Udall, please. Yeah, go ahead, please.
I just wanted to say that I still feel really enthusiastic about what are we calling it? The optimization plan on the Portland
Great.
building. Having spent a little time over there and repeatedly getting lost on the 12th floor. I think there's a lot of room for improvement, and as someone who appreciates a collaborative work environment and sharing resources and not reinventing the wheel, the plan's really exciting to me. That being said, I really don't know if I can support it if it's going to come at the cost of our commitment to the PSU project. And it's my understanding that it is a commercial condo, that we can sublease it, and that we could sell it. Is that true?
Absolutely.
Okay.
There's nothing that would preclude our using it as an owner would use it.
And I'd love to see the city, actually make money on a deal like that for one.
So would I. Absolutely. Great, thank you.
Thanks for the time.
Yeah, thank you, everybody. Thank you, Tom. Thanks, Ken. Appreciate it.